Hey YouTube, welcome back to another video. In this video, I'm going to be talking about Intuit, which is a business that provides financial management solutions for people's taxes and also for small businesses and self-employed people's finances and business management. And as we can see right here, they sell a variety of different products, including TurboTax, QuickBooks Mint, CreditKarma, MailChimp, as well as another software known as ProConnect. And in this video, I'm just going to be breaking down what exactly it is that their business does, as well as go into their annual report to discuss some of their financial statements so we can get a better understanding of the business's financial health. And then I'm also lastly going to be doing a discounted cash flows analysis of Intuit so we could figure out what a good buying price would be for us from a value investing perspective. So let's get right into it. The first thing that I want to touch on is the products that Intuit sells. The first product, as we can see right here, is TurboTax. TurboTax is essentially just an income tax preparation software for individual consumers. The next one is QuickBooks. QuickBooks basically provides small businesses and self-employed customers with financial and business management services. So this is for entrepreneurs or other small businesses that have less revenue than more well-established businesses. And the next is Mint, which is basically a software that helps customers track their daily finances as well as their financial behaviors. Next is CreditKarma, which is Intuit's latest acquisition. They acquired CreditKarma December 3rd, 2020 for $8.1 billion. And basically what CreditKarma does is it helps customers with their credit scores, as well as monitoring their credit and also getting loan recommendations for things like mortgages and car loans. And then lastly right here, we can see they have ProConnect, which is a software that is mainly geared towards professional accountants, and it helps them prepare and file taxes for their clients during tax season. All of these softwares, primarily for Intuit, primarily generate revenue from sale of subscriptions, and then some of them are sold as packaged products. They mainly market these products through different segments like newspapers, television, radio, billboard, as well as digital marketing like search engine optimization. Obviously, when people search up like Intuit TurboTax or really any like tax software, Intuit is the first to pop up. And then they also advertise through just online media and pay-per-click advertising. So that's how they get their products out there and more well-known by customers. So the next thing that I want to do is go into their annual report and just look at some of their financial statements. And the first page I'm going to do that on is page 40. And we can see right here, this is a little bit of a financial overview of Intuit's financial operating results over the last 3 years. The fiscal year ending 2021 basically is made up of the start of 2020 and then ending around like the first quarter of 2021. And so we can see right here that total revenue for fiscal 2021 was about $9 billion. And that's up from $7 billion in 2020 and $6 billion in 2019. So they increased their revenues from 2020 to 2021 by about 25%. And their net income increased by about 13%. So they're definitely increasing their operations year over year. Next page I want to look at is page 42. We can see right here they start to go in depth into how their business's revenues are broken up by product. The primary source of revenue for Intuit comes from QuickBooks, which is primarily geared towards small businesses and self-employed entrepreneurs. So we can see right here that the percentage of total revenue that came from their QuickBooks segment made up almost 50% of their total revenues. And if we scroll down here, we can see the next segment of their business, which is TurboTax, which is primarily offered to people who are individuals filing their taxes and preparing their income taxes around tax season, like March, April, around that time period. And so for fiscal 2021, TurboTax made up about 37% of Intuit's total revenues. CreditKarma was recently acquired, as I said before, December 3rd, 2020, so they don't have results from operations for CreditKarma in fiscal 2019 or 2020. But for 2021, Credit Karma made up about 9% of Intuit's total revenues. And then lastly, for ProConnect, which is geared mainly towards professional accountants and sold mainly as a packaged product, it made up about 5% of Intuit's total revenues in fiscal 2021. So the next page that I want to look at is page 58. And we can see right here, this is a more comprehensive look at their income statement for the past 3 years. Their revenues, as I pointed out before, have increased, and they're primarily made up of service revenues as opposed to packaged product revenues. Most of their revenue expenses come from marketing their products through the main methods that I discussed before, like search engine optimization as well as digital marketing. And we can see right here that their net income has increased a little bit slower than their net revenues have increased over the years, from about $1.5 billion up to $2 billion in fiscal 2021. And next, on page 60, we can see their balance sheet, which basically gives us a snapshot of Intuit's financial statement at the end of fiscal 2021. We can see that their cash and cash equivalents decreased quite a bit from 2020 to 2021, from $6 billion to $2.5 billion. And that primarily probably came as a result of them acquiring Credit Karma and spending about $3.4 or $3.7 billion acquiring Credit Karma in cash, and then the rest of it was in just the market valuation of the asset itself. And we can see right here the total assets for Intuit have increased by almost 50%, from $10 billion to $15 billion in 2021. And then their total stockholders' equity has increased from $5 billion to about $10 billion in 2021. So it's almost doubled in just 1 year. And then lastly, we can see their consolidated statement of cash flows. And we can see right here, their net cash provided by operating activities has been increasing year over year. Despite the pandemic, they were still able to increase the amount of cash that their business was producing. And then obviously net cash used in investing activities, majority of that came from them acquiring Credit Karma during that operating year. And then from their financing activities, they paid back some debt that totaled out to be about $3 billion. And that's obviously a negative outflow of cash, which is in contrast to the inflow they had in the year before and the outflow they had the year before that. And their cash and cash equivalents at the end of the period for 2021 was obviously down from 2020 due to the acquisition of Credit Karma. So the last thing that I want to do is do a discounted cash flows analysis of Intuit, just to figure out what a good buying price would be for us from an intrinsic value perspective. So the way I'm going to do that is I'm going to get the growth rate from Yahoo Finance, which I can get just by going to the analysis tab for Intuit and then scrolling down, and we can see that the growth rate for Intuit projected by analysts for the next 5 years is 17.40%. And for growth rates years 6 or 10, I'm just going to go into it with a conservative estimate and just slice it by about 1/2 at 8%. For the year one free cash flow, I got that from TradingView just by going to Intuit, going to the cash flow section, scrolling down, and we can see that for fiscal 2021, their free cash flow came out to be about $3.19 billion. For the net cash minus net debt, I also got that from Yahoo Finance just by going to the statistics tab and then scrolling down and seeing from their balance sheet that their total cash came out to be about $3.25 billion and the total debt came out to be about $2.51 billion. And so when we subtract that, we get about $740 million. Stock ticker is Intuit, and then shares outstanding I got right here, which came out to be 283.17 million shares. So after plugging in those calculations, we can see right here from their free cash flow that this is how much their business is projected to produce in the way of free cash flow over the next 10 years based on these growth rates for years 1 through 5 and then for years 6 through 10. And then we discount those cash flows back by our discount rate of 10%, which is basically saying that if we invested $2.9 billion today, a year from now, at a 10% return, we would get $3.19 billion. And then if we, in year 10, invested $3.4 billion today, then 10 years from now, at a 10% annual rate of return, 10 years from now, we would have $8.9 billion. And so basically how this works is we just add up the present value of the free cash flow plus the terminal amount, which is how much we would theoretically sell the business for in year 10, which is just a 10 times multiple of year 10's free cash flow. After we add these values together, we get the present value of the future cash flows. The intrinsic value is just this present value plus the cash that is already on the business, which is $740 million. So that comes out to about $69 billion. And then we just divide this amount by the shares outstanding, and that gives us the intrinsic value per share of $245.32. And relative to the business's current share price of $641 per share, that obviously would put Intuit at a strong overvaluation at the moment. But also keep in mind that the discounted cash flows model is not fully comprehensive. It's not a perfect tool, but it's definitely a tool that we can use when referencing what the intrinsic value of a business might be. But we can also play around with the growth rates. So let's say, for example, that the growth rates for years 1 through 10 were to stay consistent at about 17.40%. That would put the intrinsic value per share at $326, which is still putting Intuit at the moment at an overvaluation of $641 per share. So if we wanted to buy this business at a 30% and 50% margin of safety based on the business's current free cash flows, we would want to buy in at about $230 per share or about $160 per share. But considering where Intuit's share price is right now, it doesn't seem like, from a value investing perspective, based on this particular model, that Intuit presents a strong buying opportunity at the moment. But obviously, based on different assumptions for the future of Intuit's business operations, we might be able to see Intuit as a buying opportunity at the moment. But it definitely depends on each investor's individual analysis of Intuit's current cash flows and share price. I would definitely love to know what everyone who's watching this video thinks about Intuit, if they think that it's a good buying opportunity or if it's a strong sell or a hold right now at the moment. So definitely let me know in the comment section below. Leave a like on this video if I provided any value. Subscribe to the channel if you haven't already, and I'll see everyone in the next one.